Welcome back. I'm James Harding, editor and co-founder of Tortoise. And in this next conversation, we have the title, Doing Well by Doing Good, Is Ethical Investment a Path to Riches or a Ruse? Or, as you would say in the newsroom, if you weren't being quite so polite, how much BS is there in ESG? And we've got a group together who I suppose are going to help us understand what businesses are really acting on and what, if you like, they're looking the other way from. We're joined by Mona Sutphen, who wins the Public Service Award today, because Mona joins us. It's, what is it, 6:15, Mona?
Exactly, yes, 6:15.
You must have thought to yourself, great, let's get the alarm on. 5:30, I really want to talk about environment, social governance.
Right, exactly.
Investment.
I said yes, and then I looked at my calendar. I was like, wait, what time is this?
You've done this to me. The thing that I comforted myself in, Mona, is that Mona was the Deputy White House Chief of Staff. When Kate, my wife, first met you, Mona was like, she came to me, she was like, oh my God, that's Josh. I was like, yes, that is Josh. If anyone knows their West Wing, they'll know that Mona played that pivotal part in the Obama White House. But now, of course, Mona, I mean, I think we're really asking you to help us understand that intersection of, you know, government and social impact on investments and businesses. I know that you're on the boards of a couple of companies. I want to talk to you about that. We're joined too by Rob Gardner, who is the investment director at SJP in St James's Place. Is I'm going to get this wrong, Rob, but in my mind is probably the largest and most influential investment fund for individuals across the UK. And so the decisions you make and how you think about ESG investing actually channels the money of countless people across the UK. Chuka Ramuna, Chuka, I glimpsed you earlier, so I'm hoping that you're there too. Chuka, you've gone from a life of politics to a life of what you might call real politics, which is thinking about ESG. You're now executive director at Edelman and the head of ESG. I think it's just interesting that Edelman has actually made an appointment to say, instead of thinking, okay, we're worried about just reputation, we're worried about corporate performance, we're actually worried on behalf of our clients about how they're delivering on ESG. So look forward to hearing from you on that.
Thanks for having me.
Thank you for coming. It's very, very nice to see you. And Alice Steenland, Alice and I are just meeting each other, but Alice, reading your bio, I'm struck by the fact you live two lives, both, you know, advisory on giant and thinking about impact for investments of giant ventures, but also sustainability for Dassault Systems. And so I hope you can tell us about life both as poach keeper and as gamekeeper.
So do that.
Glad. I'm going to start, Mona, if I might, with you, because what tends to happen in conversations about E is that ESG is that we do a lot of E. We do a lot of emissions, and if 2020 has been about anything, it's been about a massive wake-up call on social justice, racial justice, and the role of companies in that area. And I just wondered where you stand on what looks like lip service and social media messaging, and what are structural changes in economic power in the US, which is what you know best.
Yeah, so thanks for the question. It's really interesting because needless to say, sitting on corporate boards and being involved in private equity investing, when the spring happened and we had the movement for Black Lives really explode with protests all over the United States, literally every corporate person I knew called and said, you know, what should I do, right? And among the African Americans we knew, we were all laughing, saying, okay, like literally I must have gotten 50 calls, and they were all exact same call, which is, okay, what do we do? What do we do? What do we do? And sharing, what should I say? Like, is this okay to say, right? Because there's a sense of sensitivity. What do I say? Yeah. And a bunch of us were always saying, yeah, this is fine to say, although I'm not the gatekeeper of what to say. The question is, what are you gonna do, right? And I would say the conversation is different than it was even a year ago. And for those of us who've been focused on the future of capitalism, sustainable investing and that kind of thing, I've been really struck, and a lot of my colleagues have been really struck at how serious the conversation is about what people should do, whether it's boardroom diversity, and that has exploded here in the United States, really what to do with the workforce and how to think about the role of the corporation in people's lives day to day and in their communities. And I think it's really driven for two reasons, which is why the S and G part in the United States, is my theory, is faster than the E part relative to Europe. But I think it's being driven for two reasons. One, it was an outside protest in, but if you notice, the protests were very diverse. It is being driven heavily by the workforce, which is younger and more socially engaged and are demanding action by their internal leaders. There are now enough senior leaders of have a diverse backgrounds that they understand how power in companies work. And so there's a level of accountability inside while people press outside. And so I think a lot of this is workforce driven. And it's demographic driven, right? As we have a whole new generation of people coming into the workplace. So the fact Goldman Sachs' average age is 28 years old tells you a lot about what the dynamic is in the workforce today. So I don't know if it'll hold, but it's definitely different right now.
And then Mona, if you are focused on what you do rather than what you say, what's the hierarchy on the to-do list? And I wonder whether you could just help us a little bit with, is it people in power at the top of businesses? Is it pay gaps? Is it access to capital for entrepreneurs? How do you think of that mix? And maybe those are the wrong examples.
No. It's actually all of those things. And Darren Walker, who runs the Ford Foundation, did a fantastic summary of like the 9 things you should do. And it's all of those things. A lot of it is paying attention to your culture in the first place and understanding where you sit is where you stand. For our private equity firm, one of the things that we did was insist that our portfolio companies, that it's not enough for you to run a good company internally and look at things like pay equity, look at things like promotion. If you don't have a pipeline, create one. So we put in some rules, for example, that at the high level of our board, that we're not approving any more deals unless the board is diverse. Like we literally don't come to investment committee unless you have diverse board members, like full stop. Mm-hmm. And people saying that we wanted people to stop doing all of their capital projects and stop when it comes to review the relationships you have, whether it's accountants or lawyers. If you have a capital project, try to figure out, is there a way we can do this more equitably? So it ranges from people to operations to how a company fits in the community. And we've really encouraged our CEOs, for example, to reach out to mayors and say, like, we want to help, right? Because it has to be everybody. But again, it's a unique moment because I think it's driven by, of course, profit, which is what companies are focused on, for-profit companies are focused on, but it's really heavily driven by workforce, which is saying, we want you to act in a different way, and workers have other places to go. And so because of the scarcity of really high qualified workers, it is having a big impact, I think, on how companies, you see it across the board, regardless of industry.
So Mona, I'm a journalist, so which means that I can only think of things, all the world's complicated issues, as arguments about 3 things. And happily, the world in this area has divided it into 3 things. And so what I'm going to try to do in this conversation is keep us to the 3. So I'm going to come to Rob and to Chukra and to Alice actually just on S first, and let's talk about the social issues, and then come back and talk about environment and governance too. But, let me just double check that we've got Rob Gardner. He's waving. Rob, can I put it to you? Obviously, the circumstances in the US are really different from the ones in the UK, at least in terms of, in some ways they're different. I suppose the thing that I'm struck by, and we may not have seen it in the chat, is that as Mona was talking, Paul Clements Hunt has posted this really fascinating comment about the way in which back in 2004, the UN thought to themselves, actually, we're going to flip from GES to ESG because we're worried that S, social, is going to be the most difficult. It's going to have a whiff of socialism about it. It's not going to be taken seriously. It's going to be avoided for a bunch of reasons, inequality, taxation, etc. Within SJP, when you think about sort of St. James's Place and the decisions you're making, how difficult is it to apply a social lens, a diversity lens, an inclusion lens on investment decisions and on the companies you back?
So I think there are lots of layers there. Well, firstly, good morning and thank you for inviting me. I think it's important to look at the sort of value chain. So at one end, you have investors, all of us on the call. We have 750,000 of them from literally 2 weeks old to over 100 up and down the country, and some in Asia and all the rest. They then entrust their money with banks and wealth managers. They then entrust their money with asset managers, who then buy or sell stocks and shares or bonds or properties. Mm-hmm. So you've got this sort of end-to-end capital chain. And by the way, SJP is a listed company on the FTSE 100 as well. So understanding that supply chain of capital, and I see that in the same way that at school we learn about the water cycle, I think it's important that people understand, I do think money makes the world go round. And I think that's why this is so exciting, because I think money can be way more influential than voting or government or politicians. And conscious, there are 2 ex-politicians on this call, but interestingly, not politicians now. So maybe they made my case for me. So the issue in that supply chain is exactly what Mona got to, which is specifically in investment management and wealth management, the lack of diversity at all levels. So first cut male, female, second cut by race, and then you've got all the intersectionalities underneath that, is very low. I started my career in investment banking, and candidly, diversity hasn't moved in 20 years. And the complaint is we don't have the supply chain, we can't do anything about it. My business partner of my previous business, Dawid Kanoti at Hulu, talks about the kinks in the hose that exist for different people. I'm a 42-year-old white guy and therefore have enormous amount of privilege. And when people say white privilege, I at least understand what it means. I've also had people call me up and go, I hate the term white privilege. You don't understand. I come from, and I think there's just a misunderstanding about that term.
But Rob, can I just interrupt? I guess the thing that intrigues me, and I put it to Alan Cho earlier this morning, Chief Executive Unilever, which is, I imagine on a conversation like this, look, everyone's on board, that everyone's committed to better outcomes, right? I wonder what happens when the doors close and you're looking at a fund and you're following how the BlackRock funds are doing, you're following how the Aberdeen funds are doing, and you're sitting there and you're making the case for backing firms that have the best policies on diversity and inclusion, and someone is sitting across the table from you going, Rob, knock yourself out with this stuff. If we don't get a decent return, we're not going to have money in these funds to make these well-intentioned investments. So can you tell us a little bit about that tension and how that's adjudicated?
So that is the tension, and I was going to get to this. I think the issue in the UK, and Mona will probably talk about the Department of Labour better than I can, but I certainly know the fiduciary duties of the UK. So my background is institutional pensions, so I understand DWP, FCA, but is my fiduciary responsibility, James, to look after you and your pension and get you the best risk-adjusted return.
Yes.
And if I incorporate E, S, and G factors, am I gonna underperform that performance that I was going to get? So 5 years ago, I worked with the then CIO of the HSBC fund to redesign their DC fund, which was over £2 billion for tens of thousands of employees in the UK, and we came up with the Future World Fund. But the hardest thing was demonstrating that moving from their old way of investing to this new way, which put ESG at the heart of it, not going to harm the fiduciary or wasn't going to impact their risk and return. My responsibility to you, James, to make sure that you have a sustainable income in retirement.
So this is the point that Ashton Shockley, I may have pronounced your name wrong, Ashton, so forgive me, is making here, if I read this right, that in your fiduciary duty in terms of pension fund trustees, there's not a liability for ESG. Your responsibility is around return, right?
Well, Trick is a former lawyer, so he's probably better to weigh in on this than me. But the industry got itself tied up in knots as to whether it was or not. I think it's pretty clear. The Law Commission, DWP, FCA, TPR, pension regulator have all come out and have absolutely said that it should come into place. The issue with all of these things is it requires change in mindset, change in attitudes. And it was easy to hang on to it's my fiduciary duty to get the best return. And that's why it's probably, the reality is people have been talking about this, since 2004, since longer, since my entire career in finance. It's only just now that I think that there's been enough momentum and enough evidence and enough regulators, so enough sort of push and pull that people go, yeah, we can integrate this. And the sort of one of the things at SJP when I came in is our purpose is very simple: financial well-being in a world worth living in.
Right.
And when I was, and I don't know how many of you have watched the David Attenborough show, either on Netflix or BBC, but the reality is biodiversity, planet, we're trashing it. So if I deliver you a secure income in retirement and we've trashed the planet, I've not done my job.
Let's come back to that. Let's come back to that in a second, because I said I want to make sure we take a look at the environmental and governance issues too.
Yeah.
But, will you talk us through this? Everyone's going to know you, but I'm just going to say, as Labour MP, one of the kind of leading lights of the modern Labour Party is you've moved into this area. I presume you've done it because you think that it's possible for investment and corporates to actually change social outcomes. But I'm interested to know what you think is the reality of ethical investment, whether it's still rather a niche enterprise, whether it's really having big social impacts, what you think needs to happen to make it have a much wider effect.
Well, thanks so much for asking me to participate in this. Gosh, there's so much to cover. I've got so much I could say, but I'll try and not conform to the old stereotype of a former politician. But I suppose I come at this in three different ways. I'm a solicitor, so I'm still a lawyer, but I don't practice anymore. I did public policy for a decade on this. I sit on the boards of 3 companies, and I lead a strategic consulting practice within a big communications firm that advises on these things. So I come at it from different angles. The reason I determined to go into this post-politics, and to be frank, I was never going to be a lifer. I started my career as a corporate employment lawyer, where I was very much dealing with the S and the G in ESG. And I did that for just under a decade. And then I did 10 years in the House of Commons and led mainly from the opposition benches on policy around the role of business, but also the different strands of ES and G. So I kind of arrived at this point because I wanted to continue to make positive change. And on this, I think Rob said this earlier, in many respects, I think the private sector is going to have more of a role to play than the public sector in some regards to transforming our society so it's sustainable in many different ways, whether you look at that socially or environmentally. And just to put in context our challenge, here in the UK, if we're to reach net zero by 2050, then we need to spend around £1 trillion, which means we need 70 billion pounds of investment into greening our economy at least every year. Now, given the public sector is going to have a mountain of debt to deal with after this pandemic and during it, it's got huge demands on the exchequer as it is. You're absolutely going to need the private sector to allocate capital accordingly for us to transform our economy. So I suppose having talked about this in a kind of theoretical policy way, what I wanted to do is actually do ESG. And so that's how I arrived at this point. The only thing I would say that across all of this, and I appreciate why you want to separate out the 3, one of the observations I make, and I'm sure Mona had this experience in the White House, is that 10 years ago, when we started making the case for a different model of capitalism, a stakeholder model of capitalism, these issues were often conflated with corporate social responsibility. It was seen as rather fluffy. You didn't, let's be honest, have major players within financial institutions taking responsibility for this stuff. I think the big change that we've seen over 10 years, and I look at this with pleasure, but also amusement, is that it is now seen as, it's often described as non-financial, but it's actually very financial. And I remember actually some of the business leaders I used to kind of talk to in these kind of private dinners and stuff, lambasting me for being anti-business and Labour for being, Marxist then. It became Marxist later, for prosecuting the argument that you need to move away from shareholder primacy and actually move to more of a stakeholder model. And now these very same people, some of the same individuals who were so hostile to me about this stuff, have been rocking up at Davos, making the case for stakeholder capitalism. We're all stakeholder people now. But the key thing is, I'd love to believe it's because these guys, and it's mainly guys actually, have seen the light. It's because ultimately the market is demanding this. And before the pandemic, it was millennials who were really, in particular, millennials and Generation X, who are powering this. And so many of our clients in Edelman, and I'm based in the capital markets financial services division of Edelman. You know, so many of our clients, many of whom are wealth managers and asset managers, tell me that the nature of the conversation they're having with the ultimate beneficiary, you know, these high net worth families, they're walking in to have that initial sign their engagement there, to have the initial conversation with the wealth managers like Rob, and they're saying, I want a really good return. Of course I want that, so I want good value, but I want my values to be respected in this as well. And that is what is moving this. And at the moment, we are seeing a $30 trillion asset transfer, at least that, from the baby boomer generation to millennials. And it isn't just because, sadly, baby boomers, you know, beginning to pass away, so the millennials are inheriting the money, but these guys are no longer entry level, training level in professional services firms, wherever it may be. They're major players now with big earning potential, and they are demanding change. So in many respects, it's the market moving this, in my view.
One thing, Chuka, there's some people who listen to all of this and think you're having a laugh. I mean, it's wonderful to talk about how these things are changing, but you know, in the UK, if people who are joining us are not in the UK, there's been the case around Boohoo. It's a fashion retailer. When people looked at it more closely, what they discovered was that it was by any measure breaching labour practices, by any measure exploiting its workforce. And the kicker was that a whole bunch of ESG funds, I think there were about 18 of them, had invested in Boohoo. And, you know, we looked at the BlackRock numbers last year. BlackRock, you know, run by Larry Fink, making a big song and dance about purpose. When you looked at its ESG fund and female participation at board level, which was expected to be 30%, last year, its ESG fund, not its main fund, its ESG fund was at 0.3%. So the gap between what companies are trumpeting and what they're doing, particularly on the investment side, seems huge. I just wonder what you make of that and how much it undermines the sort of credibility of the whole project.
Well, of course it does call into question the credibility of the project, but I don't think fundamentally that lone example, not that I'm saying you're arguing this, will alter how people see ESG investing overall. As it happens, I mean, I know some of the investors who, you know, the asset managers who were invested in Boohoo. And in fairness to them, they did not necessarily, they weren't hands off in terms of their stewardship of their holding in that company, etc. But I think there are obviously some learnings that come from that. One is the ESG ratings agencies, they're useful, but as a starting point.
Yeah.
And, you know, they are quite, how can I put it, circumscribed by the disclosures that the companies themselves make. They also use AI, machine learning, natural language processing to come up with a scoring, because they scrape lots of data that's available publicly. But ultimately, there is no excuse for good stewardship and engagement and due diligence at the point that you invest and the stock becomes part of your portfolio. And so I think to some extent it highlighted, yes, the ESG ratings agencies have a role, but they should not be determinative in terms of what to do. And I think with the investors, I mean, Rob made this point quite rightly, is that if you really, you know, if you're going to a wealth manager who then will use an asset manager, you know, to what extent are there demands that these asset managers are complying with the global standards frameworks, GRI, SASB, etc.? What are the investment firms doing at an enterprise level themselves? Because they lack credibility to say that they are making change and demands of companies, you know, corporate issuers, if they themselves aren't employing good ESG practices. And this is one of the things actually that a lot of the wealth and asset managers come to us about, because although they are the experts in, you know, they're the guys who do the financials, at an enterprise level in their own businesses, they are well aware that they're not necessarily performing terribly well.
I'm smiling because as you were talking, Rob Gardner dropped a brilliant old Tony Benn quote into the chat. It's the same each time with progress. First they ignore you, then they say you're mad, then dangerous, then there's a pause, and then you can't find anyone who disagrees with you. So absolutely brilliant. Thank you. I'm going to come to Alice in 1 second. I just want to pick Mona up with one thing that you said in the chat too, which is top quartile performance on ESG investment. Just can you just translate into human? Is what you're saying there that the best performing investments you're making are those companies that are best performing by ESG metrics.
Yeah, so what I'm saying is that if you, that what you're trying to do, and I think what Rob, this is the place where everybody's trying to go, is that you can, in fact, have a top quartile, yes, top performing from a financial performance perspective, right, and be able to analyze what Chuk was saying down through, like, is this actually something that is moving the needle with transparency, and it's a good company, and you can see, you can do that deeper due diligence and say, yes, this company is having a big impact on social outcomes, either because they're improving education outcomes or healthcare delivery, or they've done X or Y or Z. And so I think in the old days, and it is money driven, obviously, because everybody's eyeing the same capital base and all going, yeah, I want to get some of that. And I think to your point about mistakes that people are making, what it's doing is it's for those of us who are really serious about this, we want to raise the bar of what good is. Right. Or what passable is, and then you're going to see the same thing that you have on financial metrics, which is there's going to be really great and medium and bad, right? And if you lie about what you're doing, you're going to get tossed, right? So it's the reaction of capital markets, right, to performance. So that's where I was headed with that.
I'm going to come back to you in a second on that, if I might, Mona. But Alice Steenland, I said that we'd stick with things S, then E, then G. Let's move towards the E bit, not least because you've got a sort of eye on sustainability, Alice. To an extent, it seems to me as though this should be easier because A, the public, I think, has a longer period in which it's been getting to grips with environment and climate and emissions issues, and the metrics seem clearer. So I wondered whether or not you can talk us a little bit, both from inside Dassel, but also when you're looking at Giant, how these investment decisions are getting made and how much those emission criteria are really getting played into decisions about allocations of capital.
Yeah, I think to some extent that's true, although we call 2020 sort of the year of S in ESG, right? For the reasons that Mona and the others have said. Climate change in some ways has been easier to work on because you have, and this is with my different hats, right? I worked a long time on ESG previously as I created the sustainability function at AXA, which is a major investor, and that's how I got to know Paul Clemens Hunt and lots of other people. So working on the ESGs for a long time, working in corporates from a sustainability perspective, and then working with folks like Giant, I think the E has been across those different categories a little bit easier, because if you look at how you can sort of quantify it, track it, measure it, in some ways there is sort of a very robust methodology built up. And even now, back to the question about what is the intersection with government, I think in the EU, the new green taxonomy, which is basically telling companies how you can report the percentage of green revenues you're generating with very detailed criteria to sort of try to eliminate this tendency towards greenwashing, which I see a lot of the comments are about and a lot of people are concerned about. I think the role of government is actually really important right now in that, and that's sort of codifying in a way the E piece in a way that has not been done, and we've not figured out how to do on the S side yet.
And Alice, can I just press you on that? Because people say that a lot, the role of government's really important. What specifically would you like governments to do?
Yeah. Oh dear, governments can do a lot. Well, I think certainly the sort of EU's Green Deal, South Korea's Green Deal, directing capital, that's public capital, and also pushing, with these rules I just described, this is the government saying we're going to push the financial markets to do more on this, and to try to avoid the greenwashing and really be very clear about what it will take to get us to a greener economy. So how do we change our energy sources? How do we change our mobility systems? All of that, the more direction you can give and the more you can sort of provide frameworks, the faster we will move. And of course, all of this stuff has been built on years of private sector experimentation, right? So the institutional investor community within Europe has been doing absolutely amazing things in the ESG space and in the impact investing space for a long time. And so a lot of what you're seeing in terms of the government movement is just building on that experience, right? So all the pilots that have been run, all the methodologies that have been developed. Now, we know where we have to go. Let's take some of that learning and let's apply it. And so I think I think right now is a real turning point in terms of ESG globally and impact investing as well.
Can I just pick up on that? I guess the sort of tone of the point that I was making to Chuka, which is that there's a little bit too much goodwill in this process, and we are creating, maybe some agreed standards, not that many, but some agreed standards, but not as much that's as mandatory as possible. I wonder what you think, and Chuka, I might come back to you on that, what you think government needs to do too. Alice?
In terms of how much should be mandatory and how much should still be voluntary? I think, like I said, some of this stuff, and especially on the E side, has been worked on, and Paul was talking about a lot of the work done by the PRI. The PRI has been around since 2006. There's been a lot of standards and a lot of methodologies, and I think at some point that is the role of government. When you have all this experimentation in the private sector, that you get some convergence and some alignment. That's what SASB is about. That's what all these voluntary reporting initiatives are about. You have all these methodologies that have frankly been on the market for 10, 15, 20 years sometimes. There's a lot of convergence around them. At some point, you need to stop just talking to the leading companies and say, okay, now this is going to apply to everyone. Mm-hmm. And that's when you shift to a more mandatory scheme. And that's what we're seeing on a lot of the E issues. And I think we will see it at some point also on some of the S issues as well.
Okay.
Yeah, I completely agree with that. There are two things I just want to say. I mean, obviously there are multiple standards and frameworks out there, as Alice said. There does need to be some consolidation because everyone's trying to be a hero at the moment. And I hear, almost on a monthly basis, there's a new grouping or organization that are coming forward with what will be the standard. Personally, I think that it has to be done independently by independent organizations without a commercial interest here, because all these people are purporting to put in place standards frameworks. I ask, maybe it's just the ex-politician in me, where's your mandate to do that? I mean, at least with SASB, GRI, the UNPRI, at least these are independent organizations without a commercial interest. But I think it's really important that if you do it, you've got a mandate to do it and a standing to do it. And that brings me to the policymakers, because I think Alice is absolutely right. You do need policymakers to take a grip of this, because at the moment it's a bit of an alphabet soup of lots of different things. And do not underestimate the impact that it's obviously law now, but will be coming into full effect at the moment in 2022, that the EU taxonomy is going to have, particularly on the E part here, which will help stop some of the greenwashing that's going on. And not only is this going to be applying to corporates that have 500 or more employees, but if you want to sell a product into the EU markets, you're going to have to comply with this. So this is another example of why Brexit's so crazy in many respects. All of our asset managers are going to want to sell their products on the continent. They're all going to have to comply with the EU taxonomy in any event if they want to do that. Third point, if there's a change in administration, please, that's my personal view, in the States, Mona, we're relying on you to get this sorted. Then I do think that the
no
Biden
pressure, pressure.
No problem.
No pressure. But I think the Biden administration is likely to move the US to a place that's caught up with Europe on these issues, actually. And in terms of the regulatory landscape, I'd be very surprised, particularly, I hate saying this because it probably won't happen now, but if there's a clean sweep and the Democrats take, both houses have gone to Congress and the White House, you can't ignore the legacy of the Elizabeth Warren campaign during the Democratic primaries. I think we're going to see some regulatory change on the US side as well, if there is a change in administration, because you just have to look at what the US Labour Department has been doing under Scalia just to see how backward that administration that we have at the moment is in relation to these issues. And I think people on the left and the right of the politics spectrum would agree with me on this, who believe in a better form of capitalism.
Okay, thank you.
Sorry, getting a bit political.
No problem. Happily, we've got Mona up early enough in the morning that she is going to be able to sort this out. So we'll come back to you, Mona. Look, there are a number of people here who just sort of made points, and I'd like to bring them in, and I'm sorry it's taken longer than it should have done. But I saw that Ed Grattan, Ed, are you still there from Tridos? And people who know Tridos Bank know that it's one of those firms that's done, or companies that have really done a lot thinking about this. Ed, are you there? Tell us the point you wanted to make.
Hi, James. Yeah, great. Well done on bringing this into the agenda for today. It's great to see. Triodos is delighted to see the sort of mainstreaming of this agenda, having been in this space. We're a Dutch bank set up 40 years ago. We have an investment bank that is about 25 years old now and has been doing impact investing ever since the beginning, and it's all we do. So I head up communications for the bank in the UK. I think the agenda is well discussed on the investment side, but obviously there is a big discussion also to be had on retail banking and the way banks are lending the money that's entrusted to them, and that's where Triodos really leads, with full transparency about every loan we make as well as investment. I think obviously the consumer pressure is so powerful here, and I'd encourage everyone on this, if they haven't already, to check out the Make My Money Matter campaign that is pushing on the pensions side, headed up by Richard Curtis, and gathering a lot of steam there. And I think they'll move from pensions to people's investments and putting pressure that way, and also their actual bank accounts and their savings and current accounts. Also the WWF film that recently came out, Our Planet Too Big to Fail, that looks at sustainable finance. My question was to the panelists was about the EU taxonomy, and I'm glad to hear it's already come up a couple of times there. And I think my concern coming from the UK is with Brexit is will we follow what it's looking like quite progressive measures from the EU, certainly on the E side, as has been suggested. I think we've been pushing that the S side must come in. To give an example, it's great to have more solar panels, more wind farms, but have the elements come from mines with youth labour in them, or some. You really need to have that thoroughness coming through. Any further comment on that is great.
I was going to say thank you. Thanks to you for flagging up Make My Money Matter. We actually had a think-in in our newsroom over a year ago now with Richard Curtis and that group, when we were just beginning to talk about how do you make the whole subject of being proud of your pension something that it was even conceivable people talked about. It's quite amazing how quickly this thing has moved and people are thinking about it. I'm going to just take in a few other points of view, if I might. I wanted to take in Paul Clements-Brown because I sort of liberally quoted from your commentary in the chat, Paul, and I'm just interested to know where you think we are in this, given that you've obviously got a sense of that it's been around for a while.
Hi, yeah, James, thanks. Fascinating session. Look, ESG was a construct to just engage mainstream investment back in 2003-04. That's worked. ESG will be that much more powerful if it was plugged into the right political economy. So after 30 years of being involved in this, ESG is good. It's powerful. It's got the conversation going, but fundamentally systems change around the political economy will change the investment chain. That's the key issue. So the work.
What do you mean by that? Sorry, Paul. What do you mean by that?
Our system is just ill-configured. I mean, it still rewards the short-term period. I'm a card-carrying capitalist, but I think capitalism it's oligopolistic capitalism. Too much power, too much political power in one place. So really, ESG will be supercharged if we begin to make simple societal changes, but that's incredibly difficult. So, it's about political economy and philosophy and changing society. ESG is a good tool and it can be powerful, but it's plugged into the wrong machine.
I see Bruce Davis is kind of cheering you on here. Completely agree. We need to democratize finance. I'm just going to bring a couple of others, and I'm going to go back to our gang of wise owls. Ashton Shuttleworth, are you there, Ashton? Hello.
Oh, thank you.
Yes, we can hear you loud and clear.
Oh, you can hear me, great, fine, thank you. No, I find very encouraging the conversations being had. My only bugbear about the whole ESG issue is it's like a really slow moving train, which I suppose it's good because it's going to pick up momentum and start pushing forward with greater change. With the impending changes around sort of climate change happening down the road or now. I mean, I've been involved on and off in this area for the last 20 odd years or so. Currently actually moved sort of sideways towards renewables. But I find the same topics and issues keep coming up and again. From when I first started out as an analyst in ethical funds for a German bank, and then moved across to a consultancy. Again, I talked in the chat about kite marking funds as well. That's something I attempted at that consultancy.
And did it work?
There was a downturn in the market at the time, so it got sidelined. So,
which is obviously a risk now as we look into a recession, whether or not this whole issue finds itself,
Well, I see the talk which is happening. I don't think it's going to be allowed to. I think there's enough steam happening, enough talking about building back better in the previous session.
Yeah.
But it's now, if anything, is an opportune time to do this, to actually cause change and effect, and move forward with the criteria and the issues which are prevalent at the moment.
So I'm just aware of time, so forgive me for interrupting you. But I wanted to take the point that you're making about this. I mean, the point about, is this really an opportune time, or are the economic circumstances going to conspire against it? I really wanted to come back to Rob Gardner, if I might, on Paul's point, which is about the changes to the political economy, and sorry to sort of dump this on your lap, Rob, but actually that cuts to a whole bigger set of questions about whether or not our capitalism is properly thought through. What do you think on that?
Yeah, so remember at the beginning I talked about the supply chain savers, and someone's just commented about, isn't it great that LGIM have done this? Here's the fact: more people spend more time making one cup of tea than thinking about their pension and investment in the UK. There's a billboard in the US from Prudential saying you spent more time looking at this billboard than thinking about your retirement. There's a brilliant podcast series on BBC, which is Their Product is Doubt, and it's about the PR firm, I'm trying to remember the name, Helen Knowlton, who was born in 1953 to disrupt our thinking on tobacco. And then in the 1980s, it was used. So Exxon in 1980 accurately forecast that the CO2 parts per million would be 420 in 2020. They predicted it in 1980. So, Lord Brown stood up in 1997, Bill Clinton went and then reversed back. So it's not like we've not known about this. And the problem is that we're all in this thinking, and we're not thinking how the people who are not in this thinking are thinking. Right. That's not too confusing.
But your point is they're not thinking. I mean,
I'm just saying there are some powerful forces out there who are disrupting the way we think. There are enough people who do not believe in climate change, full stop, and have deliberately used psychology to do this. Now, I think one of the issues here is leadership, and there's no point in going, well, why don't the politicians do it, or why don't this do that? I think we need everything to come together. I think that's what the gentleman was saying earlier. So we need consumers to demand stuff. We need consumers to say, actually, I want my bus to be electric rather than diesel. I want Amazon to do this. And will I stop using Amazon if it doesn't behave the way it does? That's an interesting question. What is my bank doing? What is my wealth manager doing? And we need an ecosystem change. And the framework for change that I use is called ADKAR: awareness, desire, knowledge, ability, reinforce. And unless you do that, change never happens. Whether you're trying to do more push-ups in the morning, drink more water, touch your toes, all of these things require behavioral or habit change. And we need behavioral and habit change across an entire ecosystem. So we can't just ask the politicians or ask our fund managers. That's my point.
Rob, I just want to kick the tires on that as regards the investment industry, because one of the things that is historically infuriating about the investment industry is that we give you the money and there's a set of fees around redeeming that money, i.e. making changes. So being an active investor, the system disincentivizes you from being aware of what's happening in your pension, because if you think you want to move things, actually there's a financial penalty often involved in doing that. How much is SJP thinking about making it easy for you to be an active investor, to pick up Ashton Shuttleworth's phrase, to think about having a living pension? Yeah,
I mean, look, one of the things that we're trying to do is certainly using the ADKAR framework. So we're one of the first people who did a full carbon report of all your investments. So every one of our 750,000 clients knows the carbon footprint of their investments. And that's 115 billion pounds, which is invested across 6 trillion pounds worth of fund managers and invested across 60 trillion companies. And the carbon footprint of our clients' money is about 20 to 25% less than the average investable benchmark.
Right.
And right now I'm working on a project of how do we surface all of this ESG data in a way that is consumable by the average person, not an ESG analyst, that is tangible. And you, James, look at it and go, oh, I know my pension is...
my money here,
Yeah, and so when I watch David Attenborough on BBC or Netflix, I can then look at my pension and go, actually, I know my pension is okay.
Rob, what's the timetable for that? When is that likely to be available?
No, we did that. We're already on our second quarter of reporting. I mean, it's continuous improvement. So you just, I'm a big believer in you need to be on the surfboard, directionally correct, and just ride the thing. And you'll make mistakes, but you just need to be going in the right direction. So.
Well, listen, I'm aware of time. I want to just come back to Alice and Chuka just for a closing thought, and I've got a final question for Mona. Alice, what would you argue for in terms of making sure, to get back to our original question, that you can do well by doing good?
Yeah, I mean, I think as everyone has mentioned, the environment now has changed so much. So the sort of slow moving train thing, I actually think we're in a very different place in history right now. I think we have hit a tipping point in terms of awareness. And again, it's not the same in all geographies and it's not the same for all topics of ESG, but I think we've really hit a tipping point, and what you see is a massive acceleration. So wearing my giant hat, the climate tech VC right now, the investments are 3 times higher than in artificial intelligence. They are 5 times higher than the VC growth on average. So in some ways, talking about the train analogy, this train has already left the station. Right. There are massive amounts of money to be made in the space of sustainable investing these days, and that is what's driving this market shift. And yes, you have regulatory influences and you have consumer influences, but the fact is it's happening. Right. And people are getting on that train. So I think I'm very optimistic about where we're going.
Great. Okay, Alice, thank you. Chuka.
2 thoughts actually, data points as to how people's views have changed on this. There is much greater awareness, and more than that, consumers are acting with their feet, with their wallets actually. And we do an annual trust barometer where we measure, frankly, ESG sentiment. 2 things to consider. In March, April, we did a survey across 12 markets on what people expect of corporates in the midst of the pandemic. And the expectations were high. People expected corporates to put their employees, their suppliers before profit. And more than that, 1/3 of respondents said that they had already persuaded acquaintances, friends, family not to buy or use a brand because they didn't think they were doing the right thing in the pandemic. Second data point, in the summer, in the wake of the George Floyd pandemic, we did a huge survey in the US. 60% of respondents said that they were now making buying and selling decisions in respect of brands, in part based on whether they thought that brand was doing the right thing on race, injustice, or justice. So I think definitely this issue has become mainstream. The proof in the pudding will be whether they continue to actually buy. So whether people are doing what they say they would do. And the third proof point is Boohoo, because although there was huge amount of focus on Boohoo, it lost more than 1/3 of its market capitalization in the month after the revelations around its supply chain. It's recovered a lot of its market cap, and it doesn't seem to have dented its sales. So lots of progress, lot further to go, I suppose.
Chuka, well, you've teed up the next session perfectly, because we're going to ask the question at 1:15, 12:15 UK time. Does Black Lives matter to business? Simon Woolley, who is the founder and director of Operation Black Vote, knows the advisory chair of the government's race disparity unit, is going to be here. So's Ashish Prashar and Katie Dash, my colleague, the mighty Liz Mosley, is chairing that. So join us in about 11 minutes for that. But before we do, I wanted to just have a 3-minute after party with Mona Sutphen on the US presidential elections, and Chuka teed this up by saying, so much will hang on that. Chuka, I'm not going to ask you to, Mona, I'm not going to ask you to predict the outcome.
Yeah, please don't.
I am going to, maybe that's why you were up all night, just worrying about that. But I am going to ask you what you think a Biden administration, if it were a Biden administration, will do, and how it will affect what we've been talking about today.
Yeah, so great question. So I actually think there are two things, as you got to remember, like there's a limited amount of bandwidth coming into this because you're going to be dealing with a pandemic immediately, recession immediately. But I think to the conversation we were having before, because we're in rebuilding mode, everybody's going to be looking at trillions of dollars of investment, and it's a huge opportunity to kind of right the ship in a bunch of different ways. And the two things the Biden administration are really focused on, one is this advancing the climate agenda. I see it as they see it as a three-fer. It deals with the need to scratch the itch of the progressive community. It also, they think they can do a deal between manufacturers and the unions, as well as red states that are energy producing states, to really upgrade the entire ecosystem of energy in the United States. They think they can pull that off. Do they need legislation and some money? Yes, but they can pull off a lot of it through regulatory means. And one of the things about the Trump administration that I'm sure lots of people are against this agenda are concerned about is they didn't do a great job of writing the regulations. So there's a lot of room to pull things back and revisit. And even if Trump were to win, and which I of course hope is not the case, states are moving forward on their own. So you're starting to see regional compacts and all the rest. So this train is leaving the station. We just don't know how fast it's going, right?
Right.
The second area is really healthcare and rebuilding the healthcare infrastructure. And Biden is really super focused on wage rates and particularly the addressing the weaknesses in supply chain really for healthcare across the country. And that goes to building on the ACA, but really goes to the heart of what you guys saw when you saw the pandemic hit. Not enough nurses, not enough PPE, not enough whatever it was, masks. There's a huge move, both parties, to onshore a lot more infrastructure and bring those higher paying jobs with him. And he's I don't think people understand how pro-labor. I think he could end up being the strongest pro-labor president we've had in a very long time, much more so than Obama, and very, very focused on money in people's pockets. So I do think those are the two places we're gonna see.
And Mona, on that climate point, I mean, it certainly hasn't sort of percolated through here the extent to which a Biden administration would just change the weather on the US posture on climate. How would that feed into treatment of business and expectations on environmental performance of businesses?
Yeah, so I think people are bracing for this in the US, almost everybody, because they can see it coming. And part of it is you got to remember the politics of this. Texas is the largest wind producing state in the United States, right? So, and Iowa. So you have these states that are red states that are now renewable states. Right. And so you're having the renewable community is starting to get much more politically active and much more aligned on what it is they want. Yes. And so the whole conversation has just changed. A lot of it has to do with manufacturers, unions, and energy producing states. That's where the focus is, because that's where the change is coming from. You don't have to convince people in California and New York, right? You got to convince people who are actually producing energy in the country and incentivizing that. So a perfect example is something really small, but I think something very powerful, which is plugging and abandoning old wells. I think the feds are going to move forward with a program to basically pay to shutter old wells that produce a lot of methane emissions, right? It creates a lot of jobs. It's good for the environment. People are happy to have it happen. Companies are happy to have it help pay for it, and so that's the kind of thing they're looking for, right? It's so
interesting this, when you sort of just begin to see the outlines of a story, or not just a story, but a theme of stories. We were talking yesterday in an editorial commission meeting about solar. And who's going to get the best shot at solar? Is it going to be the deserts of China? Is it going to be the US Southwest? Who's going to win? And you begin to see this global competition, this sort of race to be the renewable superpower, in a way in which that happened a lifetime ago in terms of fossil fuels. Completely fascinating. Mona, we have to bring this to an end. I say we have to, I have to, and I've let it run far too long already. But I just wanted to say there are loads of people who've made really interesting points and contributions. I want to thank you for the things that you're submitting in the chat too. We do try to harvest all of these so it informs our thinking about these subjects, the way in which we inform the Responsibility 100 Index. But there's something just exceptionally valuable about having the expertise of Rob Gardner, Chuka Ramuna, Alice Steenland, and Mona Sutphen to just get our minds whirring. Thank you so much for doing that. Join us, we'll be back in 5 minutes to try and get to grips with the question of does Black Lives Matter matter to business? Look forward to seeing you then. Thanks, everyone.